Now we have an opportunity to hear from a central bank, a key partner, of course, for cooperative banks in their digital transition. And to moderate this session, I'm going to be handing over to our dear friend, Gillian Tett. She's here with us, and she's going to be interviewing Edouard Fernandez-Bollo, member of the supervisory board at the European Central Bank. Gillian, it's over to you.
Well, hello everyone, and I'm delighted to be back again on stage, not talking myself, but having a chance to ask questions to somebody who is very relevant for the work that all of you are doing. It's Edouard Fernandez-Bollo, who's on the ECB Supervisory Board, who has spent much of his career looking not just at central banking, but in particular at supervisory issues. Previously, I've discovered a few minutes ago, was a philosophy major and did your PhD in philosophy before you went to the Banque de France. And so hopefully has a very broad perspective on the challenges now being faced by the banks. So I'd like to start with a fairly simple question, which is, in your view, how safe is the financial system today in terms of stability? Because I think 2 years ago, everyone would have said that things were much safer than in 2007. But then, of course, we had the dramas in the American regional banking sector with Silicon Valley Bank and others in the spring. So I'm curious, I mean, could that be repeated in Europe? Do you think the system now is truly safe and stable?
Well, let me first say that I am also very happy and honored to be there, speaking with an anthropologist that has really made a career in finance and analyzing with a different view. And I think that the difference of view, we will come back to that, having different views on the situation is extremely useful also for the thread of banking, for the core banking business. So let me then make a nuanced answer to your question, because three things I want to say. First, that if you take all the usual measures of strength of the banking sector, and especially, of course, let me speak about the Eurozone banking sector, we've never been so good. I mean, the solvency ratios, the liquidity, one can criticize the measures, it's not the right one, but compared to the past, if you see the evolution from the past, the liquidity ratio, the non-performing loans ratio, we've never been so good. So the structural, I will say, indicators, key indicators of strength are there. Let me add that it is not only the indicators, but also globally, the negative interest rates. This is something that kills the banking business. So the fact that we are out of the negative interest rates, that gives, I will say, back some breathing space to the transformation that is really key, especially here. Again, I will say, when you compare the Eurozone, is in the big systems, is the one that relies more on transformation. More than 60% of all the profits of the Eurozone banks comes from net interest income. So both from the fundamental metrics and from the economic business case, we are much better than we were, in fact, 2 years ago, even 3 years ago. But of course, crises happen. And I used to be also supervisor of insurance. I always say insurance dies of cancer, but the banks, they die from heart attack. And the heart attack can come. And it comes when it is unexpected. So I don't expect the repetition of the crisis that was in the US. But as a supervisor, prudential supervisor, I cannot rule out that there are other shocks. And what we have seen is that endogenous shocks are more risky than exogenous shocks. Finally, the banks in the last 3 years, they have seen a lot of exogenous shocks. And they have reacted rather well. When you have endogenous shocks, it's much more difficult. And I will take not only the Silicon Valley Bank and things, take the British gilt market. That's frightening. I mean, this was something very strange. Well, the banks were not involved, and especially the Eurozone banks, but you have one of the most deep markets that can, unexpectedly, in a week, be so completely frozen that the central bank has to intervene. So this kind of shock, I am not particularly spooky about what's happening with the interest rates in the US, but I will say that this kind of things, an unexpected shock on basic markets that has not been anticipated by the risk management of the financial sector, we are paid and should be paid to be prepared for that, not to forget that.
Well, what ties together the shock that happened in the British pension market last year and the Silicon Valley shock was that both of them, in essence, came about because a decade of very low interest rates had made investors very complacent and bank managers. And when the interest rates suddenly jumped up, that was a big shock. Do you think today that people in the financial system have really understood what the end of quantitative easing actually means? And not just the end of quantitative easing, but the fact that we are potentially looking at market rates that are going to be a lot higher, particularly in America, because of concerns about the debt, but not just in America. Do you think the system is really prepared for higher interest rates?
Well, as I said, I am paid to be dissatisfied with the situation of the banking system. So I will never say, and I will go back to that, if there is one big risk in the financial system, it is complacency. What was the common factor, it was very, very different, these two shocks, is that it was something that was completely not managed because it was out of the vision of the bank managers or pension fund managers when we were speaking for the gilt issue. So these black spots in the risk picture, these are really the risky ones. And they can come from, again, from different sources, but what makes them dangerous is that they are not foreseen and that you are not prepared. So it's not the specific things. For instance, if you say Silicon Valley Bank, of course, they were grossly unhedged on the interest rates. This, for instance, in the European banks is not true. I mean, the European banks are much more hedged. So what I feel for the European banks is not the Silicon Valley shock, it's precisely the shocks for which they are not equipped.
Right. So let's talk about another issue, which is climate change. The Network for Greening the Financial System came out recently with a very thoughtful paper about what banks need to do with climate change. But there are still some big challenges there. Are you happy with how the regulators are proceeding with the climate change issues right now? And do you think the banks really get it in terms of how they are preparing to deal with those risks?
Well, I will say that their climate change is a very structural an essential problem. It's, well, it was Mark Carney that said it, because it's based on the tragedy of the horizons, that all our norms, all our regulations are essentially based I will say, to a 1 or 3 years horizon of distress. That's how the regulation is made. And clearly, it is not adapted to a risk like climate, because climate will not materialize next year. I mean, the big thing, the problem of climate is that we are, I believe, the ones that are really experts on climate, which is not my case, of course, but we are in a tipping point risk. So that means that today it's not something that translates immediately in financial risk, but when it will translate, it will be too late, because then you cannot prevent it anymore in a safe way. So we need to adapt the regulatory treatment, and I will say, because regulation is heavy to change. I've been a long time member of the Basel Committee. I know it's very difficult to get consensus there. So I will really say that now it's the time for the supervisors. And this is what we are trying to do as supervisors. We are trying as supervisors to say to the banks, you must take seriously the novelty of this risk into your risk management processes. You really need to change them. So that's why we're saying you're not making a breach of any regulation, but you're breaching, I will say, the basic prudential ethos of a banker if you do not prepare for what is unexpected, what your regulatory tools are unable to grasp. So you really need to do it. And we are very serious about that. And I dare say, maybe I'm wrong, I hope I'm wrong, that we are the most advanced supervisors on that, because we are now we have begun to do that 3 years ago. We make, I will say, a very global survey of where the banks were. Then the result was the banks were very conscious of the problem, but doing nothing for the solution. That was not the place where we want them to do. So we have now set expectations about when you come with the first steps for the solution, because the first step is to measure the risk. Again, it's the problem is the tools for measuring financial risk are not adapted. So you need to get first the basic numbers and then to construct on that hypotheses, models, and things that are not yet there. So we know it's a process that takes time, but because it takes time, you must start now. And so we are starting now, in the time we're speaking, we are starting to tell the banks, we will not accept anymore that you don't develop it.
Right. And in terms of other risks that obviously has been a topic discussion today, these sort of digital risks, cybersecurity risks, how concerned are you that the industry is still very vulnerable to cybersecurity risks? And it's not just about hacking, it's also about the concentration in, say, the cloud computing sector. The Bank for International Settlements has recently been sounding the alarm a lot on the problems about concentrated cloud computing exposures and the dependency that the banking sector has on just a few technological service providers or digital service providers and digital links.
Well, of course, this is one of our emerging risks, and we are also trying to develop. It's a bit of the same. It's not a risk that will put you down normally the next year. At least we hope so. But it is something in which you need to invest. And this oligopolical situation in cloud will not generate a big issue in the next year, normally not. By the way, the banks are maybe those entities that have still more in-house capacity for IT than other sectors of the economy, but it is something well. But I will say, so it is one of our records. I will say that it is on IT, we are also worried on another thing, that is the future of banking. In fact, the IT is not just about risk. IT is about your business model. You may end up with being just the subcontractors of an authorization to a big tech. Well, that's not a very bright future for your sustainability. So you need also to take digitalization as a way to transform the business, to provide, to give services to your client, to engage now today, to be able to deliver the services your client will need tomorrow. And I will say this is even especially, I would say, important with an audience of the cooperative banks,
Well,
because of the nature of their clients. So here, I will say the future building issue of IT that I mentioned, I would say it's even more important.
I'm fascinated. I'm going to ask the audience for questions in just a moment, so do start thinking about questions. But before I do, what do you think about the cooperative banking model? Is it a good idea or bad idea in the current environment? And do you expect it to last?
Well, first, as I am a supervisor, I try to refrain from saying good or bad to, to the persons I supervise. And then the second point is also as a supervisor, I value very much the diversity. You know, one of the things that's very old, from the 19th century, one of the first supervisory measures was the measure of concentration. So I think that the fact that there are diverse business models is a strength and certainly not a weakness of the banking system. So in this point, the sheer diversity that they exist and make the banking system diverse is a good thing. Second point is also that they target, I will say, they are not the only ones, but they target the most core of the banking's economic function, which is the small and medium enterprises. Because the markets, which are developed a lot, which are developed a lot more in the US than in the EU, for instance, or in the UK, the markets serve well big companies or growing companies, companies that grow very much. But a tissue of small and medium companies, it's the banks that are really financing and that are giving them the service they need for the future to develop in the future. So I will say that traditionally, they are in one of the core functions of the banking. So it's important that this goes well.
Yes.
Third point is that, and this is the more cooperative part of it, is that they claim, you claim, to have a different relationship with your clients. And I will say a relationship that by definition makes your interest more aligned than in more traditional commercial banking. I'm happy to live with that, but the proof of the pudding is in the eating. So let's see that.
Right.
That's for you to prove that really you are giving an added value to the customers because of this relation.
Right. Well, we have just a few minutes for questions before we wrap up for drinks and get ready for the boat cruise. Anyone got any questions they'd like to ask? I believe there are some microphones around about. Everyone's heading for the drinks. Okay, we have a question at the front. If not, I have plenty more I can ask, but...
Bonjour, Lionel-Beau, donc président de la Banque Populaire Auvergne-Rhône-Alpes. Notre modèle coopératif, qui est un modèle, on a beaucoup débattu cet après-midi, qui est vertueux, qui est moderne, qui, vous le savez bien, qui finance la majorité de l'économie française, aujourd'hui est fait du fait d'avoir au conseil d'administration des chefs d'entreprise ou des représentants du territoire, des différentes activités. On sent qu'au fil du temps, on nous demande à ce que ces administrateurs deviennent de plus en plus avec des connaissances bancaires. Et donc, du coup, il y a un risque à un moment donné à ce que certains entrepreneurs ne viennent plus dans ces conseils d'administration et qu'on dénature un petit peu ce modèle coopératif. Pensez-vous pas qu'à un moment donné, il y a un risque justement de le dénaturer à travers des administrateurs qui auraient beaucoup plus de connaissances financières et qui, à un moment donné, bien sûr, pourraient challenger les équipes dirigeantes, mais à un moment donné, qui ne seraient plus si représentants de leurs différentes activités ou différentes parties du territoire.
Oh, à vous. Alors, si vous voulez en français, soit en français, soit en anglais. Ouais.
Yeah.
Je crois que c'est mieux better in English.
Okay, so our key concept there is collective suitability. So we want, and I think that there have been also stories in the cooperative world that show we need challenging boards. This is just a safety thing. You need challenging boards. You need challenging boards. That does not mean that there should be only challengers there. We are not saying that. We understand fully that there is a diversity. There should be a diversity in the compositions of the boards. When we are speaking with a cooperative, we make a bit more stress on the banking capacities because these are the ones that are a bit lacking in your boards because of the historical issues. But we are not saying change your boards completely and recruit only bankers. We are certainly not doing that. We value very much that there are different voices and it's the collective suitability that we want to enhance. And we will come to you, by the way, very soon with saying we also need people that are experts in IT. We also need people that do care about climate change. But these are not necessarily bankers. But we will be asking also the classic banks to recruit some people that are, I will say, that should be very involved in challenging the banks on this part. So again, what we want is collective suitability and to be sure that the banks have the whole capacity that is here. But we don't want one model of the banks. That's absolutely clear.
Are you likely to require that banks operating in Europe in the future have somebody on their board who is an IT expert in the future?
We are going to require that the board is able to challenge. How it is, we try to leave it to, because again, we are supervisors. We should not be dictating how the board function because it is exactly what we don't want. The responsibility of managing a bank is in the manager, of controlling the management is on the board, and us is controlling the two of us. So we cannot be doing what the board should. So what we need to have the capacity. It's clear that at some size of the banks, we may do that. We may do that, but we will see it on a case-by-case basis. We may require the bank say, well, here you really need to have someone with IT skills on the board. If not, we have to see how this challenging takes place.
Right. Any more questions or issues that people would like to raise? If not, I would like to ask you a question myself, which is, how concerned are you about the potential jump in oil prices or other shocks coming from the events happening in the Middle East at the moment? Is that creating a great amount of discussion for you amongst your supervisors? Because some people have been invoking the specter of, the oil shock 50 years ago.
Of course, like everybody else, we are looking at what could be the consequences. Of course, not what's exactly happening now, but if it gets worse. What's happening is terrible, but from the financial point of view, the problem begins if it gets worse. And I will say, I come back to my first point. It is the unexpected that will be the issue. Because a rise of the oil prices that stay in the boundaries of the stress test models, we have seen that the financial sector in the Eurozone can wither it. But if there is a massive geopolitical capacity, of course, this issue is not in the models, and then we can be surprised. That's it. So exactly what we are trying to see is, and what we tell the banks is, be very aware of what is going astray from previous patterns. So be aware of what you have in your models and try to detect as soon as possible when it's going outside. Of course, geopolitical risk, the banks nor us can really look into the mirror and see what will happen. But at least this is the state of mind that we want to have.
Right. And another question I have, since we are, unless anyone else has any more questions, but another question I have is, I don't know if you saw the other day that de la Rosière wrote a piece in the Financial Times really warning that we can't take the single currency, the euro, for granted if the European financial architecture remains very fragmented. Now, you have spoken before several times about the need to create more integration in Europe's financial architecture, and yet in reality, that has been proceeding very slowly.
Very slowly.
Very slowly. I mean, you have made some quite angry speeches about the lack of integration. Do you have any hope that the integration is going to accelerate over the next year or two? And if it doesn't, would you share de la Rosière's concern that that could imperil the euro?
Well, first, the digital euro is precisely one of the initiatives that we make in order to favor integration. Because that means that with the digital euro, the smallest bank in the most remote parts of Europe can offer its clients something that will be accepted as legal tender in all Europe.
Right, so a really small cooperative bank can suddenly do that just as well as BNP or
exactly.
Deutsche Bank or someone like that.
And the amount will be there so that we try to manage the situation of the different banks. So it is a push for integration. What we are saying is that we need also this push to be embedded in the strategic reflection and actions of the banks, because we cannot make industrial puzzles. The supervisor cannot say there should be integration. Integration should be a business, and the business should be run by the businessman. So what we are saying is that the sustainability, the comparative sustainability of the business model in Europe, or relative weakness, has never been, by the way, liquidity, never been solvency, it has been profitability. And when I say profitability, let me explain, I'm not meaning profit that is distributed to shareholders. We are not saying about gross profit, but the profit that can be retained to ensure the sustainability of the bank business. And in this sense, profit is also an issue for the cooperatives, because you want to be able to continue to provide services to your clients, and you need to be able to get the means of that, precisely because you don't have the same access to capital markets. So that's why I would say in this sense, net capacity to build your business, integration is really one of the issues that can help in Europe and has not helped for the time being. So we don't think it's sustainable if we don't develop integration. But we cannot develop it for you.
Right, so I think that's called a call to arms on behalf of the cooperative banks. It seems like a good moment to draw this to a close. I mean, the key takeaways I have from our conversation is that you think that the financial system, broadly speaking, is stable at the moment, notwithstanding the dramas this spring with Silicon Valley Bank or the current explosion of geopolitical risk. But as ever, you're concerned about the chance of black swans, unexpected shocks. Obviously, the digital issues are posing big challenges. And above all else, what we need to think about going forward, particularly in Europe, but not just in Europe, is how to make smaller banks, which are so important for the diversity of the system, how to make them profitable and sustainable in a long-term way. And maybe, just maybe, a digital euro could help. Or digital currencies. That's a very controversial point. Not everyone agrees. I don't know whether most people in the audience are handling digital currencies yet or not, but certainly I think that's a way of saying watch this space. So thank you very much indeed for those very thought-provoking remarks. I'm now going to hand over.
Thank you so much to both of you. Thank you very much, Gillian, for being with us. We'll let you head back to your seats, Edouard. Thank you very much for being with us. Gillian, just stay for a second because you've been here with us all day, haven't you?
Indeed, yes. I'd be most interested, as we're literally going to wrap up, we've only got a couple more minutes and then we will be going off, a bit of free time in time for dinner. I'd just be interested, Gillian, any final thought from you? Because you've been here today, you've also been involved in the sessions, you've seen some of the sessions as well. What's your key takeaway from today?
Well, I think the actual point we just heard, to my mind, is really at the heart of the challenge facing the cooperative banking sector right now, which is, on the one hand, there is absolutely a very strong case to encourage as much diversity as possible in finance today. During the 2008 financial crisis, the head of financial supervision at the time, and then economics at the Bank of England, Andy Haldane, wrote a brilliant piece saying that the problem with banking before 2007 was that it was like the Amazon jungle. And by that he meant it looked very impressive from the outside because, like the Amazon jungle, there were lots of big trees, but they were all designed or they'd all evolved to fulfill exactly the same ecosystem niche. So they were actually all identical. And when something hit the forest, in this case the subprime mortgage losses, all the trees, all the banks were affected, and the system as a whole was a lot weaker than it seemed from the outside. So Andy Haldane said that diversity of business model is essential to enable financial systems to thrive. And as I said earlier, what I've been hearing about the way that the cooperative banking model is so much in touch with customers and clients and its social and political context, that again is a tremendous strength that needs to be celebrated. Because, as I said in my own speech, we live in changing times when the relationship between business and society is changing, and cooperatives, in some ways, should be having their moment in the sun because that approach is so important today. The problem, though, as we've just heard, is how to make it pay. Because when you have banks which are finding it hard to be profitable, that's partly because of the macroeconomic climate. It's also because there may be simply too many banks. Yeah. And that is the dilemma going forward. How do you combine those two elements or different elements in the future? I don't think the macroeconomic climate is going to get much easier. I don't think that there's much appetite for consolidation going forward. But those challenges, I suspect, will become more intense, even as we've heard, the environment around cooperative banking in many ways is more supportive in a political sense. Yeah. So politics or economics, that's going to be the challenge. And maybe, just maybe, technology in the form of digital currencies is what could change the debate.
That's lovely, thank you. I think it's so interesting what you say. I love this idea you're talking about resilience from a diverse banking model, because it really is, that's like nature as well. It's the immune system, isn't it? The immune system, because not every single bank is the same. If they're all the same, they can all get taken down the same way.
Yeah, I really would recommend anyone who has to make the case for diversity of business models, go back and type into Google Andy Haldane and Amazon and banks and have a look at his paper, because it was a very powerful, very well-argued paper, which, coming from an Anglo-Saxon banker, was all the more remarkable.
Fantastic. Thank you so much, Gillian Tett.
Thanks for being with us, Gillian. Thank you very much for your time.